everybody. This is James Donnelly, founder of Safe Haven Insurance, your Medicare and health insurance safe place. I am joined here today by Tim Kennedy. He is a reverse mortgage specialist. And I know there's a big taboo about reverse mortgages.
Oh,
I
man.
know there was, right? And I know they've evolved and come a long way. And
Yeah.
I really think it's something that we need to talk about.
So James, thanks for having me on your show. I really appreciate being here today. So thanks for having me.
Of course.
And there's this big cloud over reverse mortgages. So yesterday I was out and about, and I was at an event, and 3 or 4 people came up to me and said, "So Tim, what do you do for a living?" I said, "Well, I'm a mortgage loan originator. I've been in the business 25 years, but in the last 10, 15 years, I've been specializing in reverse mortgages, the home equity conversion mortgage." And everybody has the same response.
Well, Tim, I have to tell you, my grandmother, and the reason I'm really I'm aware of reverse mortgages is, well, I think I am, and I'm looking to get an education today. But my grandmother took out a reverse mortgage about 18, 19 years ago.
Yeah.
She borrowed like $200,000. And now the loan's up to like $750,000. The house isn't even worth $750,000. So, so it used to be like, people preyed on seniors for these reverse mortgages, and
Yeah.
So that's all I really know. That's what I know about reverse mortgages.
Well, there you go.
So.
Thank you very much.
Okay.
So anyway, so the responses I got yesterday, you're like, "Oh yeah, reverse mortgage. Oh yeah, you must be busy because inflation is so high. Seniors on fixed incomes, and maybe they didn't plan or what." And I said yes. I said that's a pretty big portion of my business, but really in recent years, our motivation now in the reverse mortgage space is to educate people on the idea that a reverse mortgage today is a tax efficient retirement income tool. And there's been plenty of studies done by people certainly a lot smarter than me and you, right? Where they say a reverse mortgage earlier in retirement is much more beneficial to protect and preserve your nest egg, your investments, and to make those last longer in retirement, where if you did it right, you'd leave a bigger legacy to your children.
Okay.
So let's go back to your grandmother for a minute, because this is interesting. So your grandmother took out this reverse mortgage how many years ago?
18 years ago.
So 18, 20 years ago. So she's been living in this home rent-free for 20 years, right? She was able to age in place, live in the home that she wanted to live in. Crazy stuff here. But live in the home that you wanted to live in, right?
Correct.
Okay.
Yes.
Now you're telling me the reverse mortgage may be more than what the house is worth.
Yes.
So that's okay, right? Because the idea of the reverse mortgage is your grandmother will not leave any debt to her children, her grandchildren, to her estate. The reverse mortgage, home equity conversion mortgage, is a non-recourse loan. So irregardless of what the value or what the balance of that reverse mortgage is, you or somebody in your family could purchase that home for 95% loan to value.
What does that mean?
That means, so let's use easy math, right? Because you and I aren't that smart, right? So your grandmother owns a home that's worth $100,000.
Okay.
Her mortgage is $200,000. Okay. You or somebody in your family come in and purchase that home for $95,000.
Wow.
And then that $105,000 above and beyond, the federal government's responsible to pay because it's a federally insured mortgage. Your grandmother paid mortgage insurance on that loan. So now you can come in, purchase that home for 95% loan to value, and then anything above and beyond that is paid for.
Wow. I had no idea.
Yeah. Non-recourse. So the biggest benefits of the reverse mortgage, right? Number one is the homeowner is not obligated to make a principal and interest payment. The loan gets paid back when they permanently leave the home, right? Number two, and again, I don't know how much time we have on the show today, but
time as you need.
the reverse mortgage available line of credit has a guaranteed growth rate factor to it. So it actually gives access more money later on in life.
Explain that.
Hold on.
Yeah.
And then the third part is the non-recourse. That's what I was getting to.
Okay.
Is the idea that a reverse mortgage is a non-recourse loan. Nobody's personally responsible for the debt, right? And your grandmother or your mother will not leave any debt to their children.
Okay.
The sale of the home pays back the reverse.
That's awesome.
Yeah.
That's really interesting.
Yeah.
So now, what were you talking about? Growth. I heard you say something about growth.
Growth rate.
Okay.
Yeah. So what happens now is years ago, right? 15, 20 years ago, you took out a reverse mortgage. Like even your grandmother, most likely, she had to take 100% of what you qualified for on day one. So what happens is that loan on day one is compounding interest, right? Mm-hmm. And it's growing at a pretty rapid pace, right?
Yeah. Oh, yeah. Yeah.
So what happens now is you can take out a reverse mortgage, like your grandmother. Maybe she qualified for $300,000, and she had to take $300,000 on day one. Now what you can do is leave the $300,000 on this available line of credit, mm-hmm. take out what she needs. Figure out what her monthly budget is. Maybe she has to pay her property taxes and insurance. So that's $5,000, $10,000, $15,000 a year. Boom, take it out, right? But you're only paying interest on the money you're borrowing.
Okay, that's it.
Right? So here's the simplest way to explain it. Your grandmother qualified for a $300,000 reverse mortgage, right?
Yep.
Look at that $300,000. That $300,000 has, for an argument's sake, a 7% interest rate attached to that $300,000, right? Mm-hmm. She borrows $50,000. So now she's paying interest on $50,000 for 7%.
Okay.
Right? But that other $250,000 is also growing at 7%.
Oh, wow.
So over the years, that other $250,000 is actually going to increase, where she'll now have access to more money later on in life in retirement. Oh, that's why the financial gurus, right, the guys smarter than us, are saying take a reverse mortgage out earlier in retirement, create this line of credit, let that grow, right? And then if and when you need the money, take it out of this tax-free bucket, let your investments and your nest egg grow and ride the market and do what it does. And this thing will grow, right? Use the equity in the home, right? And at the end of the day, you could leave a bigger legacy to your children.
Yeah, I see that. And what I'm running, and the reason I had you on the show really is because the whole reverse mortgage thing definitely intrigued me. I knew a little bit about it, but 7 out of 10 of my clients that I work with for Medicare are struggling.
Yeah.
They bought their house 30 years ago, 40 years ago. The kids are out. They're struggling to pay the bills. They're living off of Social Security. Let's face it, most people didn't have pension jobs.
Yeah.
And they're struggling, but the home's paid for. So,
and their response is, I want to leave it to the children. Well, guess what? The children don't want the house.
And that's the whole thing. So it's either your children are going to help you financially right now, cover your expenses, and then, get it back when you sell the house, when they sell the house, when you pass away, or you could live like a human being. Like really, like the quality of life that I'm
just enhance lifestyle.
I know. Yeah. The quality of life that I'm seeing for seniors, 7 out of 10, like I said, they're struggling.
Yeah.
And a lot of them, and out of that, the 7 out of 10, 4 out of that 7 are struggling to pay for medications because, the Medicare formularies are a lot different than group formularies, and their out-of-pocket costs for medications are obscene.
I saw a study a couple of years back when seniors, right, pay off their mortgage, their pharmaceutical bill skyrockets. Why? Because they were paying a mortgage and they didn't have enough money to pay for the medications. So now they pay off the mortgage. Now they have money to pay for the medications. So they're denying themselves the health where they need it, right? So that was an interesting study,
No, very interesting. Yeah, and it's the truth. I mean, medication costs are capped when you're on Medicare. I mean, max out of pocket is $8,000 a year, but still $8,000 is substantial. Yeah. But here are these people, their son lives in Texas, their daughter lives in Massachusetts, their grandchild lives in Florida, and they're stuck.
And one son lives in the basement, probably. Yeah.
But they're struggling to pay their bills to make ends meet. Yet they could take this reverse mortgage and travel, live a little bit. I mean, they busted their humps. Their whole life to pay off this mortgage and raise their children, and now they're struggling. So what's the point in that? Use this equity in your home to enjoy life.
I always use the analogy of the oxygen mask, right? When you go on the plane, they tell you put the mask on yourself first, right? And then put it on the person next to you. That's the whole idea of the reverse mortgage or any other retirement tool that they can use to protect and preserve the money they have to last longer in retirement, right? The idea is they have to take care of themselves first, like your grandmother. She had to take care of herself, or she is still taking care of herself, right?
She's actually bedridden. She had an injury a couple of years ago. Her health is deteriorated, but she's able to age in place at home.
That's my right.
But that's where she wants to.
For almost 20 years, she was basically independent, right?
Yeah, correct.
And the idea is they have to take care of themselves first. And then at the end of the day, has a life of its own, this thing.
Yes.
At the end of the day, whatever's left over, that gets dispersed amongst the family, which is fair.
No, very fair.
I'm not saying take the money and go to Vegas, right? I'm saying
if you wanted to.
If you wanted to, yeah. I'm saying is, take the money, use it as you need it, right? Only pay interest on the money on your borrowing, and then leave the other money, chunk of money on that line of credit, and then use that as you need it. Yeah.
What is the age where you're able to take out a reverse mortgage?
So here are the requirements.
Okay.
You or your spouse, one of you has to be at least 62 years of age.
Okay.
It has to be on your primary residence, and you have to pay your taxes and insurance and maintain the property. Okay. So 62, primary residence, pay your taxes and insurance, maintain the property, and you can live there forever. Like your grandmother, even though her house might be upside down, she can live in that home for the duration of her life. Down
from what you just explained.
Well, it is because the house is here and the mortgage is there.
Yeah.
But she can live there for as long as she lives, provided the taxes and insurance are being paid.
Okay.
Right.
Wow. So a lot of people that I sit down with retire 62 years old, right?
Yeah, that's your wheelhouse, right?
Yeah. So that's 62. Well, 65 is my wheelhouse, but 62, they retire, right? They come to me looking for health insurance to gap them from group coverage to Medicare.
Yep.
So they retire 62, but they're like, oh no, I don't want to collect Social Security because they still have a little part-time job.
Yeah.
We could only make $21,476 a year.
Yeah.
But if they tap into this reverse mortgage, it's not income.
They call that Social Security bridging Social Security, where they could take out the reverse mortgage. Let's say their Social Security payment is $2,000 a month. They could make a monthly payment out of the reverse mortgage from, let's say, 62 to 67, right? $2,000 a month, every month for that time period. And then when they file Social Security at 67 or maybe 70 when they can max it, now they stop. They turn the spigot off on the reverse mortgage and they turn the spigot on for Social Security.
Wow.
And they still have an available line of credit.
Which is growing.
Again, every scenario is different, but they most likely have an available line of credit still there growing. Now they're getting the Social Security. Right, or they can collect both at the same time and live their lifestyle.
Or they could
every
just
time.
open that spigot if they want to go on vacation, if they want to help with a wedding,
turn it on and off as they need it. Yeah.
That's really interesting. Yeah. So they've really evolved.
They really have evolved over the last 15 years. So, for example, where does dark cloud come from? All this negativity.
Yeah, let's talk about that.
All right. Yeah. So, number one, if you were 62 and your wife was 59 or under the age of 62. Guess what we did? We took that spouse under the age of 62 off the deed and not on the mortgage, right? So what happens? You pass away first, right? Yeah. And now your wife she doesn't own that home. She has no rights to that home. Okay. So she has to pay back the mortgage, right? Sell the house or be foreclosed upon. So, and that was really like a taboo and a real
Why would people do that?
Huge black eye. To the reverse mortgage division. Why?
What was the motivation?
Well, because you're 80, right? And your spouse is 65 or whatever the case may be. The reverse mortgage is based off of the age of the youngest borrower. Okay. So what did we do? We took the 65-year-old off because now you qualify for more money as an 80-year-old.
Oh, wow. Okay.
And then the 80-year-old dies. Yeah. Now the 65-year-old spouse says, oh, I didn't know. No, you don't own the home, right? So they now put in guidelines where the non-borrowing spouse is protected. Okay. So they can live in that home for the rest of their life, provided they continue to pay the taxes, insurance, and maintain the property. So that was like the number one biggest negative towards the reverse mortgages. And that's where all the misinformation about, oh my God, if you take out a reverse mortgage, they're going to take your house. Well, no, they took the houses because the non-borrowing spouse could no longer pay the taxes and insurance, and they were foreclosed upon. So now the non-borrowing spouse is protected.
That's amazing. So they could live there in essence for the rest of their life.
Yeah, they're protected to live in that house.
So let's say mom and dad take out a reverse mortgage. They're living their best life because truly they are. They're able to tap into that equity on their home and enjoy life.
And they possibly eliminated a principal and interest payment, which gives them $1,000, $2,000, $3,000 extra a month.
Okay, that's interesting too. So we need to talk about that because I have somebody in mind. I have somebody in mind for you. So now they're living their best life because they're able to enjoy their retirement and tap into this equity in their home, right? Mom and dad pass away. Dad passes away. Mom passes away. Now, how long do the children have to kind of get rid of the house?
Sure. So everybody has. I got a phone call the other day from the son of the borrower, and the son calls me up and says, "Tim, my mom passed away. You know, what do I do about the house?" And I said, "Oh my goodness, I'm so sorry to hear about your mom. When did she pass away?" "About an hour ago." I'm like, "Dude." I said,
"Oh my god!" You were the second call, right?
Yeah. They called the corner. They called Tim Kennedy, right? So I'm like, you need to relax. Okay. Take care of what you need to take care of as a family. You know, you're mourning the loss of your mom. You know, do whatever you have to do at the funeral parlor. Whatever you got to do at the church. You know, whatever you have to do, to wrap things up, and then give me a call. Okay. Nobody's landing a helicopter on the front lawn, right? Changing the locks and boarding up the windows. Okay. So they would call up the servicer, "Hey, mom passed away." And then the servicer is going to say, "Well, what are your intentions with the home?" Like in your scenario, if that's a good house, you may want to purchase that home at 95% loan to value. And you'll call them and say, "Hey, we're going to purchase the home." In this scenario, they said, "We're going to sell the home." Okay. So they cleaned out the house, they put a coat of paint on it, and they put a for sale sign out front. So they have 6 months to sell that home.
Okay.
And if there's any complications or delays, they have 2-3 month extensions. So in essence, they have 12 months.
Okay.
And in this market, if a house stays on for more than 2 days, these houses are going fast. Yeah. So they have, in essence, they have 12 months to sell that home.
So the only thing they're responsible to pay is 95% of the loan to value ratio. And then anything over that, they could split amongst the estate.
Nope, you confused me there. Say it again.
Okay, so you said if they were going to, pay off the loan. So explain that to me.
Okay,
so do they have to pay off the loan in its entirety, or do they have to pay off 95% of loan to value?
So you're purchasing your grandmother's house.
We're selling it.
Let's pretend you're purchasing.
Okay.
You're going to purchase that home for 95% loan. Her mortgage is $200,000. The house is worth $100,000. You're going to purchase that home for 95% loan to value.
Okay.
You're going to come to the closing table with $95,000 plus closing costs. Anything above and beyond that is not your responsibility. Okay. You're selling the home. Okay. That house is worth $100,000. You're going to sell that house for $100,000. That buyer is going to come to the closing table with $100,000 plus closing costs. That other $100,000, because it's a federally insured mortgage product, the federal government's responsible to pay the lender, not you, not the estate, not the buyer.
So that 95% loan to value ratio doesn't apply if you're selling the home.
No, because you're going to sell a home for fair market value.
Okay, got it.
Right? They don't get you get the benefit as a relative. You can buy for 95% loan to value.
Got it.
All
okay.
Right?
So loan to value. So if so we're saying if the home was worth 100, we would have to just buy it for 95,000.
95% loan to value. But if you're selling it to a stranger, you're going to sell it for the highest market value you can get because, in that scenario, there is nothing left for the family. Yeah. But if your grandmother's house, she only had a $50,000 reverse mortgage on it, then you'd want to sell that house for as much as you possibly can because you're going to keep the equity in that home.
So so let's say grandma borrowed $200,000. Right, it's now $700,000.
Okay,
right. House is worth $500,000.
Okay, so you're $200,000 short, right? So you're going to sell that home for $500,000.
Okay,
right? That's what the house is worth. The federal government's responsible to pay the other $200,000 back to the lender.
Got it. What if I wanted to buy it?
Then you'd buy for 95% of $500,000
of the market value, not the loan. Okay, got it. Okay, now
market value.
Market value. That makes sense.
What is that house worth in that area? And value is based off of square footage and recent comps and condition.
Yeah.
A little bit.
Okay.
Plus or
minus. As long as the taxes are being paid, right? And the insurance, you're good to go.
Yeah, you're good to go. Okay. Yeah.
Well, interesting.
And you're not responsible to make a payment. Where if your mom and dad had a traditional mortgage. Oh, right, forward mortgage, and they passed away, and you wanted to keep that house, you'd have to continue making principal and interest payments.
Yeah.
That's money out of your pocket.
Oh, yeah. There's a lot of money. Yeah, definitely. So what would you do in an instance, let's say mom and dad retired, they still have a mortgage on their home. Not a big mortgage. Let's say the house is worth $7,000. They have a $300,000 mortgage on the house, so they have $400,000 in equity. How would a reverse mortgage come into play? Because now they're struggling to make that mortgage payment.
They're making mortgage payments in retirement. Who wants to do that?
Okay.
I don't.
Yes.
Right? I would much rather live in a home that's either free and clear, or I eliminate that principal and interest payment with the reverse mortgage. Okay. Right? So in that scenario, we would pay off the balance of that reverse mortgage. Right? We'd pay off the balance of the mortgage they currently have. Right? Give me a payment. What's the principal interest payment?
$2,500.
So now we just gave them a $2,500 a month pay raise because they're no longer making that payment to their mortgage company. They're no longer taking $2,500 out of bucket number 2 and depleting that bucket, especially if there's a down market.
Yeah.
Right now they
don't have a bucket. It's their bucket.
So they already exhausted their bucket, right? The bucket 2. Yeah. So now we just gave them a $2,500 pay raise. Okay. They would have so let's take a step back. How old are they?
They are, let's just say 75.
75. So they would let's use easy math. They qualify for 50% loan to value. Because the way you qualify for a reverse mortgage is based off of the age of the youngest borrower, the appraised value of the home, and then what we call the expected rate. So the mid 70s, we use 50% loan to value. What is a house worth?
7.
So 700. They qualify for a $350,000 reverse mortgage.
Okay.
And what's the balance of their mortgage?
300.
300. So they would have a small available line of credit of $20,000-$30,000.
There are closing costs.
There are closing costs, right? So we would pay off the $300,000 mortgage, plus the closing costs, and they would have what's left over, which would be $20,000-$30,000 on an available line of credit.
Okay.
But the biggest key to that is they're not spending $2,500 a month on a mortgage. They can now use that to pay their bills, pay their taxes, car repairs, house repairs, travel. I have clients where they've taken that $2,500 and possibly, use that money towards a whole life insurance policy or something along those lines, because they know if and when they pass away, the equity is being chipped away with the reverse mortgage, but now they got this life insurance policy that when they go, the kids get what they're going to get, right? Or they could use a life insurance policy to pay off the reverse mortgage and keep the house.
Now, can you take a reverse mortgage and buy a life insurance policy?
James, did you do your homework?
I'm asking you.
So, that's probably like one of the best kept secrets out there is the reverse for purchase.
Okay.
Right? So now you have seniors out there, especially here in Long Island, right? You got these big, huge houses, 2-3 stories, in-ground pool, half acre, right? Or more.
Yeah.
And they're in their 60s and 70s, and they just can't afford it or maintain it. Okay. But they can't afford to sell because they can't afford to buy, right? Because they're on a fixed income. So with the reverse for purchase, now follow this. They have this $700,000 home.
Okay.
Let's say it's free and clear. They sell that home. Let's say they net $700,000. Instead of taking that $700,000 and purchase something else cash, because for most of us, 70% of our net wealth is tied into the equity of our homes. So they need that $700,000 to live off of in retirement.
Yeah.
And they can't use it to buy cash for another home. They also can't call up the local mortgage guy because they're not going to qualify for a traditional conventional loan or an FHA loan, right? Because they're in a Social Security or a pension or maybe a small part-time job. So what they can do now is they can purchase their next home with a reverse mortgage.
Shut up, really?
Come on. I know you set me up for this. I know you did. So now they can purchase this home.
Okay.
Let's say, for example, they're going into $1 million home.
Okay.
Or let's go $1 million.
Okay.
So instead of taking $700,000, putting $700,000 and now trying to qualify for a $300,000 mortgage, they could put down $500,000, keep $200,000 in the bank, and then we would finance the other $500,000 with a reverse mortgage, reverse for purchase. So now they've left the house that they couldn't afford to manage. Right now, for example, they're out in the hamlet in Mount Sinai, gated community, golf course, clubhouse, pool, and the guy doesn't have to lift a finger.
That's amazing.
Right? So that's one scenario.
Okay.
Right? Let's say, for example, they really want to downsize. So now they have that $700,000. They're going to purchase something for $500,000. Right? Because everything's expensive.
Yeah.
You know? So now they can put down $250,000. We would finance $250,000, and they would keep the balance of that $700,000 in the bank for them to use in retirement. Wow. So why are seniors moving or relocating, right? Relocation, right? They're either moving closer to family, maybe warmer weather. You know, in today's political environment, maybe they're moving into a more tax-friendly state, right? These are all different reasons. And they're either upgrading or downsizing, or we like to say in the industry, right-sizing, right? The other big aspect, I don't know if you know this, James, silver and gray divorce.
Yes.
It's quadrupled in the last 20 years.
I was just talking to an attorney the other day, and they said that silver divorces are like a huge thing.
It's huge.
Yeah.
Yeah. Well, you know, listen, they're 60, 70. The kids have moved out. They're empty nesters, and they wake up one morning like, what are you doing? Like, who are you? And what are you doing in my bed, right?
Yeah.
So the idea is, you know, if the couple's getting divorced, one spouse may want to stay in the home, but they can't afford a traditional mortgage, right? Because the other spouse
don't qualify for one.
Well, they're not going to qualify. Yeah. Why? Because the one spouse is leaving. They just lost that income, right? That other spouse wants his or her 50%, right? And they can't afford it. But with the reverse mortgage, that one spouse could stay in the home, pay the other spouse the 50%, get rid of them, and now that spouse could purchase a home with a reverse for purchase because he has that big chunk of money, and he's over the age of 62. He'd qualify. Here's the other scenario, and this is the scenario I talk to realtors about a lot. They're going to sell the home, so now the realtor gets the listing. They sell the home. Both spouses separate with 50% each. Now the realtor can help both of these clients get homes with the reverse for purchase. Oh, wow. So they just went from one transaction to possibly 3 transactions. That's awesome. And do you know, and I'm in a room with 15, 20 realtors doing a presentation. I'll say, everybody raise your hand. Who has a divorce attorney as a referral partner? Crickets.
Really?
Crickets.
Wow.
And I'll tell them, you need to connect with a divorce attorney because this market is huge.
The silver divorces.
Yeah. Yeah.
Wow, that's so interesting, and that's really great to know that there's so many options for
so many options out there.
So if you're getting a silver divorce, if you need to downsize, upsize, relocate, reach out, Tim Kennedy.
Yeah.
And I have one more question before we even get into the contact info. Let's say you take a reverse mortgage out. Can you use that equity that you pulled out, that cash that you pulled out, to put into an annuity? Or to buy a whole life policy.
So they really frown upon that.
That's what I was asking.
Yeah. So they really frown upon that. But I got to be honest with you. I thought you were going with, can they take the funds from
No, that was the first one. Now this is the second one. Could they take them? Yeah.
No, this is where I thought you were going.
Oh, okay.
Can they take the funds from the reverse mortgage from their primary residence and purchase another home or an investment home?
Okay.
So the answer to that is yes.
Wow.
And I do have a couple of clients that took out a reverse mortgage, took out the bulk, right, the lump sum money, and purchased an investment property. And then what he did, this is how smart this guy was. He took the rental payments from the investment property, paid back the reverse mortgage because you can make payments if you want to. And he did that. And 2-3 years later, he bought a second investment property, took the rents from both of those properties, paid down the reverse mortgage, and now he has a third investment property.
So now there are so many things you could do with this reverse mortgage.
So many things. Yeah. And that's why when we started this conversation, I don't know how many hours ago, it's not just a last resort, last ditch effort to keep somebody in the home.
It's a way to get creative.
You're real creative.
With growth in your retirement.
Yes. Yeah. Yeah.
This is really interesting. I learned a lot today, so I really appreciate it.
So James, what do you do for a living?
We'll get to that. I have a health insurance agency. We specialize in Medicare and health insurance. But I really just wanted to get the word out there about you.
I appreciate it. Thank you for
really,
the time.
because I really see a value in what you do. And a lot of people don't know about what you can do with a reverse mortgage. It's really, I just learned a ton.
And James, I don't know if you know this or not, but I am a certified reverse mortgage professional. I am one of maybe 200 in the entire country with that designation.
Wow.
Yeah.
Okay.
Yeah.
So there's about 4
So I actually know what I'm talking about.
Yeah, that's so great. So how do they get in touch with you?
They can reach me at 631-430-2456. 631-430-2456.
And where are you licensed?
I'm licensed in New York, New Jersey, Pennsylvania, and Florida.
Okay.
And
awesome.
but I also have a team of retirement mortgage professionals throughout the country. So if you have a state that I just mentioned that I'm not licensed in, I can point you in the right direction.
Wow. This is great. Thank you so much, Tim, because I learned a lot and I have a potential client for you.
There you go. Giddy up.
This is great. All right, everybody. See you next week. If you enjoyed the content, like, subscribe, and share, please. Thank you so much. We'll speak to you soon.